The government's monthly employment report showing a gain of 175,000 jobs in April. Joining us right now is his insights on what that number says about the economy and what it could mean, maybe more importantly, for the Federal Reserve. Roger Ferguson, former Fed vice chairman and a CNBC contributor, and as I have repeated over and over again, possibly the only person that we've talked to over the past 2 years that's gotten what the Fed may do next right. So, Roger, what's your assessment of this number, and what does the Fed do next?
I think it was a good number in that it showed the economy is still doing well. It was not a number that suggested, increasing inflationary pressures, but nor did it suggest that the Fed should change its outlook and bring in the expectation of cuts. So I think right now this is a number that didn't move things too much one way or the other, and I think the message is still the same. Inflation is still too high. They have to be attentive. They'd like to cut rates. I'm not sure yet that they're any closer to that because of this number, however.
The bias is towards cutting. You don't think there's any chance that the Fed would feel that they need to switch gears and at some point raise rates?
Well, you heard Chair Powell the other day say exactly that. Look, I think inflation has become incredibly unpredictable. We've seen it be stickier than we thought. Unlikely that they'll have to raise rates, but I wouldn't be so quick to say it's not going to happen.
Right.
I would say it seems like not the likely outcome. But nothing is impossible at this stage, and I think the Fed should be prepared to move as the numbers suggest.
So in terms of looking, though, at the numbers and the way you think trend lines are progressing, and I know it's moving around, if there was going to be a rate cut, do you see a rate cut happening in this calendar year?
I think it's 50-50, frankly. Earlier, one would have said, and they thought they were going to do 3. The markets thought 4 or 5. We've had, the first quarter was much stronger than anyone expected. And let's see how the second quarter shapes up. The economy is doing very well, which is a good thing, but it is not consistent with inflation coming down much more quickly towards 2%. So I think it's a 50-50. They'll keep rates exactly where they are to the end of the year.
Is it crazy to be able, and I don't know if we can hold both ideas in our mind at the same time, to say the economy is doing great on one end, and on the other end say that we're in some form of stagflation?
I think it's hard to say that. I think stag doesn't seem to be the story right now. The economy is growing at potential. Our potential is roughly 2%, maybe a bit more. And there are a lot of good things that go on here. So I wouldn't say stagflation. I think we've got what's going on ultimately is inflation is sort of a little sicker than we thought. Interest rates are in somewhat restrictive territory. We're not sure how restrictive. And there are certainly interest-sensitive sectors and individuals that are suffering a little bit, but not stagflation.
You're not as happy as I think you should be, Roger. And only 50-50. The futures, the Fed futures are ticking up, and it's a high probability that by the end of the year, at least, that there's a cut. But you didn't immediately say, yeah, there's going to be a cut now because of 175. You are still worried about sticky inflation. You're still worried about sticky inflation.
Absolutely still worried about sticky inflation. You're right, Joe. Look, to be very fair, the market is hoping for lots of good reasons, cheaper money. That drives equity valuations. Many good things happen to market participants when money is cheaper than it is today. That's not the Fed's job. And so those of us who are focused on the inflation world should say, the signal more than the noise thus far this year has been inflation has been hard to drive out of the economy. We like a strong economy. We'd like to get inflation closer to 2%. The Fed has been adamant about the 2%, and there's some way to go.
Pretty amazing moves in stocks and bonds, though, after that, Roger. Like you see the 10-year, we were 465 or something a couple of days ago. Now,
but one shouldn't be surprised.
Yeah.
We can't be surprised. And remember that the market really has gotten this wrong more than right in terms of expecting Fed cuts. So let's just wait and see how the data play out.
Yeah, both ways.
Absolutely.